Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, we made it to the end of the week. It's Friday. What's going on in the markets today? Well, they've been all over the place, right? We're down about 100 on the Dow now, about 100 on the NASDAQ, but they've been up, they've been down, they've been up. They've just been very volatile day today, right? Okay, so we've had 3 up days, boom, 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 and then we had 3 down days, boom, boom, boom. So in the last 6 days, we're really back where we started from, right at support levels. And what's interesting to me is the support level is a 200-day moving average. And the 200-day moving average, every index is sitting on. The S&P's sitting right at the 200-day. The Dow Jones right at the 200-day. NASDAQ right at the 200-day. Even the Russell 2000 right at the 200-day. This is a support level. Now, we're going to go lower. The market is going to head lower. We're going to take out those October lows. It's my take on the market, but we're going to get, right now we're oversold and we're sitting right at support. We should bounce off of it a little bit to get a very weak rally, which I think should be sold because I do think we're headed lower to take out those October lows. This is just my take. Now, if you want something positive, okay, let's take a look at the NASDAQ. The NASDAQ is having what's called the golden cross, right? 200-day and the 50-day is coming up above it. Okay, so they're having a golden cross moment right now. Now, the other 3 indexes have already had that and they're coming back down, but these all are going to be pulled lower. Now, will we get a bounce from here? Will we get the support from here? I think we will. I think we'll get a very feeble bounce, maybe even a strong bounce. Maybe we can get back to 4,100 on the S&P. I don't think we'll go up that high before we start coming down. You see, the NASDAQ is showing us that we got support here. We're getting the golden cross, so we're probably going to get a little rally. But I think the rally should be sold. All right, let's just move over to well, I want to talk a little bit first about the banking. Banking is getting really interesting. Now, I live in Silicon Valley. Santa Clara is the home of Silicon Valley Bank, right? Now, Silicon Valley Bank, they got a big problem. And the big problem was brought on again. Well, this may be what the Federal Reserve has finally broken. They were going to keep raising rates until they break something. Well, this may be the canary in the coal mine. Okay, so this bank, they had about $60 billion in under assets, under management back before the pandemic, right? 60 billion. Okay, so they were a decent sized bank, mid-level bank, right? Well, during the pandemic, they printed all the money, trillions of dollars, and a lot of that flew into Silicon Valley where I live. All right, so this bank went from 60 billion to $212 billion under of assets that they manage. Okay, now their job is to, lend it out and make money, right? But that seems hard. So what they did instead is they buy assets. Banks are allowed to take your money and go out and buy assets. Now, this is interesting to me, right? Okay, so they have $212 billion under management. So they went out and they bought $80 billion worth of mortgage-backed securities. Now, these securities, they had a 10-year maturity rate. They were probably commercial mortgage-backed securities, and I talked about those before. Who's going to be the bag holder? Well, I think today we're finding out who that bag holder really is. Okay, so we were in this 0% interest rates where the Fed kept rates at 0% for 12, 14 years, right? All right, well, the Silicon Valley Bank, they're thinking, well, we can't get any money at 0% interest rate, so we're going to go out 10 years. We're going to loan this money out for 10 years and buy these mortgage-backed securities, $80 billion worth of them. All right, well, what happened? Well, they were getting 1.5% return on their money. 10-year was paying about 1.5% back then, but now the Fed has bumped up the rates so high, so fast, right? We're sitting about 5% now, and we're heading higher, but we may not go much higher because they're going to have to pivot here. Now, here's why. Here's what's happening. This affects the real estate market. Oh, does it ever going to affect the real estate market? Okay, so anyway, so this bank, they now have these $80 billion out. But this wasn't their money. This was just people come put money in the banks. All the businesses like Apple, like Facebook, like Google, they have their money sitting at Silicon Valley Bank. These are a lot of big players, right? $212 billion is sitting there, and they loaned $80 billion of it out. Well, now some of these people, they want to have their money back. They're having a run on the bank. Well, the bank doesn't know what to do. They got $80 billion that they got to get back somehow, right? So they're selling this at a massive loss. They sold 20 billion of them so far, took a $2 billion hit. Now, why'd they get the bank run? Well, they got the bank run because they came out and they said they were trying to sell equity to raise money to make the bank make it it's still able to run, right? So they came out announcing that they were going to raise between $2 and $3 billion by selling shares of stock. Well, the stock was trading at $350. It dropped to 106 yesterday, 106, and that's where it closed. I mean, they froze it. It's not trading today. This bank is done. They're looking for a buyer for this bank. Now, Goldman Sachs put together a buyer just yesterday at $95 a share. But as the stock was just free falling yesterday, that deal fell apart because they can't open the stock for trading because it'll pretty much go down to zero. So Silicon Valley Bank is in a lot of trouble right now. Janet Yellen, she's out there talking today that not to worry. She's watching this. Now, do you think that this is the only bank that did this? Do you think the other banks may have tried to get a better yield than 0% and went and bought some commercial mortgage-backed securities? Maybe they bought some auto paper, auto loans. Those were paying higher rates. Who's the bag holder, right? This is the bag holder. But now there's a run on this bank, and this bank is insolvent. They got to find a buyer for the bank, someone to take it over. But I don't think they're the only bank like this. Now, this, when you look at the real estate market, it ties in real close, right? Okay, so all that commercial property, they're not going to be able to get loans anymore because the banks aren't going to be able to make them these loans. They're going to have to charge them 8-10%. And these commercial properties are just going to go under. They're just going to hand the keys back. But who's holding the paper? Well, these banks are holding the paper. They're the bag holders. These banks are going to go out of business. So when you go in for a house loan, are they going to have money to make house loans? Well, the government, they'll keep printing it, right? They'll be the buyer of the mortgage-backed securities. The government will be the bag holder. But the government's me and you, right? The taxpayer. The taxpayer, once again, is going to be the bag holder. Now, be careful with banks, because before, right, during that 2008, we had the great financial crisis, and the government came in and bailed out the banks with your money, my money, right? But now the government says, no, the banks are going to have a bail-in. Do you realize if your money is on deposit in a bank, they can actually bail in to bail out a failed bank? Now, what they do in return is they'll give you shares of stock in the bank. But the bank's broke, so what good are the shares of stock? This is unbelievable what could happen. And it could happen overnight. It could happen over this weekend. I don't mean to scare anybody, but it's getting to that point where you got to start thinking about this stuff, how to protect yourself, what to do. All right, so what I want to talk today about in the real estate market, I got a little long-winded there, but anyways, in the real estate market is this wealth transfer. You see, we have a big wealth gap, right? A big wealth gap between the poor and the rich. It's never been bigger, not since the Great Depression. We're bigger now than we were in the Great Depression. The wealth gap's extreme. The rich are so rich and the poor are so poor. Now, also, there's a wealth gap between the young and the old. The old people, the boomers, they got all the wealth. They got all the money. The millennials, not so much. When we were at the age of the millennials, we controlled much more of the wealth. But the wealth is 50% of the wealth in the world is basically real estate. So how does wealth get transferred? How's the wealth transfer going to happen? Look, baby boomers want to sell their homes to the millennials, right? But we want to sell them at the price that Billy Bob got. But the millennials, they can't afford to buy them at the price Billy Bob got, so something's going to happen. Well, the houses, they're going to reset. They're going to become affordable again. People are going to get hurt. People are going to feel a lot of pain. And I know when I start talking about this, it triggers people. There's going to be a crash. It's going to be ugly. It's going to be about 50%. And that could be conservative, right? Now you go, Mike, there's no crash in my area. There's no inventory. Look, if the banks don't loan money, we're just talking about Silicon Valley Bank. If you have to pay all cash for properties, do you know what that's going to do? 50% is going to be nothing. It's going to be 80, 90% drop. If they... I get carried away with this stuff, and I know I offend a lot of people, and a lot of people will unsubscribe, and that's okay. I got my loyal friends on here that are my regular listeners. Look, people are going to get hurt. It's going to get ugly. Look, I lived through that 2008 thing. Okay, all right, 2008, nothing's been fixed. Nothing has been fixed since 2008. The only thing that's happened is we printed $30 trillion. You take out that $30 trillion, where do you think the economy would be right now? Where do you think house values would be right now? Where do you think the stock market would be right now? It would all be a lot lower, at minimum 50% off. And it's going to come back. There's going to be this reset. And people don't want to hear about the reset in your area. Maybe your area will be spared. But what happens? Okay, so what happens? Okay, here's what happens. All right, back in 2008, I handled a lot of these transactions for the banks. Okay, before I went into real estate, I actually worked in a bank. That was my job. I was a banker, and I just couldn't do it. I left the bank and I got into other businesses. Okay, but anyways, back in 2008, here's what was happening. Okay, so this one guy, he bought this house, Los Gatos, California, paid $2.8 million. He owed the bank $2 million, right? Well, the property got cut in half, went from 2.8 down to 1.4. The bank took it back. Now, he lost all his wealth that he put into it. $800,000 he put into it. That wealth got transferred from him. He lost it. The bank had a $2 million loan. They sold it to my client at $1.2 million. So the bank lost $800,000. Now, that was bailout money, taxpayer money. Now, what happened? Who did it get transferred to? It got transferred to my client that bought it for $1.2 million. Today, that house is about $3, maybe even $4 million, but that's going to get cut in half again. We don't learn anything because nothing was fixed from 2008. It's going to happen all over again. Now, I had another client, okay, so they go out to Vallejo. In Vallejo, this house sold for $800,000. $800,000. All right, well, what happened during the financial crisis? The market came down, right? The market came down. It came down. Okay, they owed $400,000, okay, but the house was only worth $200,000. So they had to give it back to the bank. They lost $400,000 of their wealth and $200,000 that the bank lost. Once again, sold it to my client at $200,000. My client sold it back at $450,000, so he doubled his money. I mean, he bought it for $200, sold it for $450, but that's up around $600,000 now. Still not back to the $800,000 that it was at in 2008 before that reset happened, before that wealth transferred. That wealth transferred to my client also. Now, I had another client in Merced, right? All right, so she bought these two duplexes. Duplexes in Merced were selling for about $450,000. $450,000 for a duplex in Merced. Okay, so anyway, she put half down, $225,000 down. She bought two of them, right? Okay, she thought this was her retirement. Well, guess what? They came down, they came down, they came down. You know what I ended up short selling them for her at? $105,000 per a piece. She paid $450. She lost $225. The bank lost $120. So wealth got transferred. She lost it. The people that bought them down here at 105, they made out, right? The wealth got transferred to them because it's the same place, right? But this is how wealth gets transferred. She did short sales. Now, she had to have a hardship letter that you send to the bank saying, oh, I can't make the payment anymore. Please take these off my hand. I have this realtor I found, Mike. He'll sell them for us. He thinks he can get $105,000 for them, and that's that's what we got, and they're probably back up to probably 250 today, maybe 300 even. So the wealth transfers, right? It comes down, but it was a V-shaped recovery in 2008. It came down, right? And then it bounced right back up. Okay, so the wealth was transferred. Okay, now this time we're going to come down. There's going to be a reset about half off. Now, it could happen over the weekend. I mean, you get a run on these banks, that gets scary, right? Everything will come down. There won't be anything left up. But that's just what a start. That's a canary in the coal mine. Look, this isn't that far off. I'm not saying it's going to happen this weekend. I'm not saying it's going to happen this year. It could still be out 2 or 3 years, but it is going to happen. And it is scary when it happens. It's going to be painful for a lot of people. There's going to be a lot of pain. Look, you cannot print your way to prosperity. And that's what we've been trying to do since 2008. $30 trillion we print. You can't do that. There's no country in the world that's been able to do that. It didn't work for other countries. Their currency got debased. It got devalued. They had to go into hyperinflation. You just can't do that. And that's what we've done. We've been irresponsible. Look at the Federal Reserve, irresponsible. Your politicians, irresponsible. And it's going to not end well. And it's starting to happen. Silicon Valley Bank, that's my old bank. That's where my money was when I had a business. Look at a lot of people today. They can't get their money out. Maybe the FDIC comes and gets it for them. Maybe, right? How long is that going to take? 6 months? Look at FDIC has less than 1% of every dollar that's deposited. Sure, you're insured up to $250,000. They don't have your money. They got to print the money, and they're going to print it, but how long till you get your money? I don't know how it works. I don't know how it will play out. Now, I know that it's a Friday, and I got carried away. I went on this rant, but it's wild stuff is happening. Protect yourself if you can. Look, I don't think it's a good time to be buying houses right now. That's my personal take. Now, you may have a different take, and that's perfectly fine. Anyways, if you like this stuff, I'm Tall Mike. Give me the thumbs up. Get out there, everybody. Enjoy the weekend. I hope I didn't depress anybody. Bye-bye now.